of any economy, reassured that the agency is fully committed to empowering Nigeria's growth and development. And to company news now, 2-day Zenith Tech Fair 2023 has finally come to a close after a series of sessions and interactions that focus on latest technological advancements and innovations shaping the future. And this is the third edition of the fair, organized by Zenith Bank PLC at their Co-Convention Center in Victoria Island, Lagos. Take a listen.
The second and final day of the Zenith Tech Fair 2023 witnesses innovative discussions and presentations. Anticipation is high as attendees are treated to a series of keynote sessions and panel discussions featuring industry leaders exploring the cutting edge of technology. The Group Managing Director, CEO of Zenith Bank PLC, in his speech, challenges them to be fired up.
The leaders, the rulers, and those who will be in the commanding height of our tech business and tech industry will be produced from this tech fair. Make maximum use of this. We are glad that a good number of students are here. So it's not about you just listening to very beautiful speeches. It's about your imagination and being fired. We'll be asking you the question, what will be your aspiration going forward?
Innovative Officer of Lagos State is here.
Making a brief appearance at the fair is the Governor of Lagos State, Babajide Sanwo-Olu, and he dares young people in the room to be innovative.
It's about an opportunity that Zenith has provided for all of you. It's an opportunity for you to be able to think out of the box, to be able to talk among your peers, and to be able to design that future that you want. To be able to ask yourself, what are those things that we believe will change our future for the better?
4 minutes on the clock, please.
Climax of the day's event is the Zecathon pitch session. From over 500 applications received, only 10 made it to the final round after a rigorous selection process. The 10 startups make their final presentations to the 4 judges and the audience within a 4-minute window.
The winner of the Zecathon for 2023, brought to you by Zenith Bank PLC, is The top 3 finalists will receive 20 million naira, 15 million naira, and 10 million naira respectively, while the remaining 7 startups will receive 2 million naira each. The Zenith Tech Fair continues to be a dynamic platform, fostering discussions on the forefront of technology, pushing boundaries, and propelling the country into the future.
And now to our first conversation. With food inflation rates in October 2023 at 31.52% on a year-on-year basis, that's 7.8% higher compared to the rate recorded in October 2022 at 23.72%. Also, we saw data from SBM Intelligence shows that almost 50% of Nigerian minimum wage earners spend their entire income on food. What solutions can technology bring to drive food affordability in Nigeria? Joining us for this conversation is Mr. Larry Smith, CEO of World Bay Technologies and founder of Grow City. Joining us right here in the studio. Good morning, great to have you.
Good morning.
Yeah,
pleasure to have you.
Yeah, so quite a stark data we have there, and today is Black Friday.
Yeah.
And I'm wondering if Nigerians will be able to get good deals for foods, maybe in restaurants and all of that, maybe some 80 or 90% off, hopefully. But looking at this data, right now, showing that Nigerians, the average minimum wage earner spends everything, on food at this time. Looking at the situation in Nigeria with food, would you say it's self-inflicted?
Well, some people might say that, but I would like to focus more on, trying to find what the solutions are. For a long time, I think we've been kicking the football forward, and now, the chickens have come home to roost. So it's time to just think about how we can make food a bit more affordable. And I think, there are solutions out there that are actually doing this.
I'm talking about, solutions, technology. We've talked about how to, get the farmers back to the farm, maybe, help, with technology so that they can bring out more food, solve the insecurity, issues. Talk to me about, how technology can, solve all these problems? Because it's a domino, at this point.
Yeah. So, I think to answer that, we first need to ask ourselves, why is food more expensive? Why is it not as affordable? Like you said earlier on, inflation year on year is about 31%. But if you go back to even August, it was at 27%. So you see that it's actually moving, in leaps and bounds. Food becomes more expensive because of issues like insecurity. Farmers are not able to get back to the farm because of banditry. We have also had increase across the entire supply chain. So when you look at transportation, logistics, storage, all these adds up. If you take a simple supply chain scenario where you have the farmers at the top, you have the manufacturers, you have the distributors, wholesalers, and retailers. In every one of those steps, you can see that the inputs, their production inputs has actually gone up. And this is because of the macro economy that we find ourselves. So technology now becomes very important and plays a huge part in addressing some of those areas. So if you look at every single supply chain that we've spoken about, technology is I would say is a key driver in helping to reduce prices there.
And talking about solutions at this time, we are where we are. Food inflation over 30% at this point. You go to the supermarket, you go to the market, and you're spending incredible amounts, for just little stuff. You don't even forget to fill up your basket, going forward. So talk to me about the kind of solutions that are out there right now to help with affordability. How can people, buy food for cheap at this point, even though it's expensive?
Yeah. So first of all, food has to be produced cheaper, right? So the first things first is what are the technologies that are there that are helping to make food be produced and distributed cheaper. Artificial intelligence is helping, things with precision farming. There's a lot that is going on in that space. Also in terms of optimizing the supply chain, being able to match properly demand and supply, predictive market pricing, all these things actually happen like in the background. But most importantly, how does this now trickle down to the customer? So I think very importantly, we now have to start thinking and cultivating new habits. Time past, you just go to the supermarket and shop. What needs to happen now, you need to start thinking more about your shopping decisions, where you shop, how you save towards actually shopping. Just like if you're going to make a car purchase, most times you just don't go and swipe your card and buy a car. You start saving towards it. You start making those plans. You start putting some money aside. So we have platforms like ours that enable consumers to start putting money aside and start making those conscious habits to actually save towards their food. What we do as Grocery is we sort of encourage this saving habit. Then through the large purchasing power of a community that we've built, we're able to now speak with the manufacturers, with the farmers, and buy directly from them, using these economies of scale to drive down pricing, and which we can end up, passing on to the consumers as well. And there are other platforms that are, that are doing other things in that space too.
Because I also hear about, bulk purchases, coming together, pooling funds, to get food cheaper, for people that participate, in that. And I'm wondering, how's that going to work? How does it work really?
There are different platforms that have different models. I can speak to the model we use, and the model we use is more of a subscription service. So what happens is you make your contributions, and we pull all these funds together. And like I said, we buy directly from the manufacturers. We repackage these into monthly subscriptions, especially the staples, because the staples are the things that everybody needs in their houses and they use on a very frequent basis. So there's a bit of a predictability towards what you're going to buy. So we can put that in a monthly subscription service, allow you to save towards that, and then we do all the the heavy lifting at the back end using technology to optimize finance, logistics, and last mile.
And talking about the heavy lifting, at this point, there's also high, cost of doing business. Right now we're seeing diesel prices, up, fuel prices. I bought fuel this morning, and it almost costs the minimum wage, at this point. How are you able to navigate all of that to get food cheaper to people?
Yeah, I think sustainability, becomes like very important. We employ a lot of sustainable ways in which we do our storage, for example, and even our last mile delivery. We use solar energy where it's actually possible. So a lot of the inputs actually become well thought out. If you think about how your production cost goes up, and you find ways to actually reduce that, then you can pass on most of these savings to your users as well. Our aim is to be able to get food to our consumers below inflation. At some point, we want to be able to be negative inflation, and I think it is possible. Technology can actually help us do that.
Yeah, I definitely cannot wait to a time where I can report, our inflation rate is actually dropping, growing at a slower pace. I'm definitely hoping, for that time soon. But talk to me again about artificial intelligence. Everyone's talking about artificial intelligence. It can do this, can do that. And there's also the talk about, being an existential threat, to humanity.
Yeah.
But talk to me about how we can actually use AI, to solve this food problem.
Yeah, I think AI is going to do a lot. It's already doing a lot. I'll give you some examples of how AI is helping to make food more accessible and more affordable. For example, in the area of precision farming, where farmers are actually able to use things like sensory imagery and satellite images to sort of analyze their fields, so they can actually optimize their resources, things like water, pesticides, and also fertilizers. Those things are the things that actually drive production costs lower. So artificial intelligence is helping there. We also have things like optimizing the entire supply chain, being able to match demand and supply in terms of logistics, being able to predict market pricing so that we know when the market needs things and when we need to store. Artificial intelligence is playing a huge part there as well. Then we look at, let's even come down to the consumer side and look at the mobile applications. On the mobile application side, from the farmer side, farmers are now able to get better information, better cultivating tips, so they can actually reduce their costs. And then on the consumer side, they're able to quickly see what pricing are doing. They're able to optimize that part of it. And lastly, I would say access to finance, agri-financing. Right, both on the farmer side and on the consumer side. I think alternative credit scoring models are now very, very possible and are being used to give farmers access to more credits, and they can use that to actually bring down costs. And as well as platforms like ours have actually taken that a step further, and we're now being able to do credit scoring using alternative data for our consumers and give them access to financing so that they can actually make these purchases as well.
Quite a lot of data, definitely there. But looking at the federal government's body language at this time, we've seen the budget. We've seen other data coming out, Q2 data. We've seen the economy not growing, like it did, in 2022. What kind of policies would you like to see, from the government to support, businesses like yours that are trying to get food cheap to the people?
Okay, I think the government is doing quite a bit now. I think it's going to take some time before we start seeing some of these policies actually work. But I would also like to add that, whilst there's been a lot of focus with this government and even previous governments as well on policies that speak directly to agriculture, but I think this needs to be expanded more to speak more towards the agri-tech ecosystem. I'll give a good example. For example, there needs to be policy frameworks that sort of reward investors trying to come in to invest in sustainable energy, sustainable cooling. A huge portion of our outputs from the farms goes out as waste. And then, it goes out as waste and spoilage because they cannot afford to actually cool these items to preserve their shelf life. And there are a lot of investors that are willing to, come in to invest in sustainable ways to actually ensure that we don't have these sort of spoil it, but we need government policies and frameworks to sort of help that. And then lastly, being able to align with our objectives, startups like us that have a specific objective to drive food prices lower, we'll need some policies from the government to sort of help us to ensure that our objectives are actually being met through a collaborative approach.
Yeah, so definitely 2023, a really tough year. It's winding down, gradually at this point. And looking into 2024, what are you seeing in terms of trends, technology that would come up, to solve this problem? And what are you seeing for food affordability, going forward?
I think for food affordability, the first thing we need to really take care of is food security. Food security is very important. We need to get our farmers back in the farm. We need to ensure that they're safe and they're able to improve their yields. I've just spoken about how technology can help do this, and we need a lot of government support and actually actions, less words and now actions to enable us to do this. Once we have a semblance of where food security is going, there are thousands of organizations out there, both national, subnational, and international, willing to partner with us to ensure that we get this food out to our users as affordably as possible. Investments needs to actually come in to enable us scale these sort of solutions, because once these solutions are just localized, it only benefits like a few people. We need to be able to scale this across regions, across the country as well.
Definitely. Well, we're all looking forward to the best for 2024.
We hope so.
Even as 2023 winds down, I hope all the macro headwinds ease going forward.
We hope so. We hope so.
Thank you so much for coming on the show, Mr. Larry Smith, founder of Growcity and CEO of World Bay Technologies.
Thank you very much. Thank you very much for having me. I appreciate it.
All right, after the break, we get a sense of what to expect as consumers in Nigeria hunt for Black Friday deals today. That's the moment to stay with us. Welcome back. Well, Black Friday is arguably Nigeria's biggest shopping season, where consumers hunt for unbeatable deals. But what can we expect this season with the cost of living crisis and rising costs of doing business? Join us now is Professor Uchenna Uzo, Professor of Marketing at Lagos Business School and Academic Director, Africa Retail Academy, joining us via Zoom. Great to have you on the show. Good morning.
Thank you. Good morning. Great to have you as well. It's good to be here. Thank you, Dad.
Fantastic. So these are quite, interesting times globally, but inflation in Nigeria is still on the rise. We're seeing easing in developed economies. Do you think this Black Friday will offer good deals in Nigeria, or maybe this Black Friday might not be as black enough for consumers?
Interestingly, it's blacker than ever, going by the data we're seeing. So I've been looking at some of the data. First of all, it's true that we had a slight dip if you look at how sales is going for Black Friday this year. But the interesting thing is that in the beginning of this month, there's been an uptake of about 40% in sales. And more interestingly is the fact that fast-moving consumer goods have come up to be among the top 3 best-selling items on Black Friday this year. And what do we mean by fast-moving consumer goods? We're referring here to rice, we're referring here to beverages, we're referring here to bathing soap. So very ordinary discretionary items are playing a key role. Another interesting thing is that prices on Black Friday have been changing continuously every day. Every merchant selling on Black Friday now, the e-commerce platforms, increase prices on an average of 3 to 4 times a day, or should we say change prices? Sometimes it may increase, sometimes it may reduce. But it just tells you how dynamic the market has become. And it's an interesting scenario to be in. So in general, what we're seeing is that consumers are being more strategic about what they choose to buy. They are buying up in preparation for Christmas because they anticipate that prices are going to go up even higher. And so this is an attempt to manage the situation while keeping an eye on the things that they really enjoy to buy. So it's really an interesting scenario we find ourselves in now.
And seeing that consumers are accumulating, at this time, so they don't have to pay more, when festivities come, isn't that going to drive up the price right now?
Well, Nigeria defies logic, I must tell you, on the consumer side. Yes, to some extent, there are going to be price increases. But you're also going to see some price reductions as different brands try to attract a larger share of consumers. And so what is really interesting now for brands is thinking carefully about how to price right. We've gone beyond the time of pricing just by doing cost plus pricing. We are moving in the direction of value-based pricing, where customers are going to be holding brands very accountable for any product or service that they choose to sell. So there will be some increases, but definitely the brands that to the customer.
And do you think businesses will be able to increase sales, at this time? And are there platforms that can actually help, to drive sales, even though, consumers are squeezed on all sides at this time?
Businesses may be able to increase sales, but it really depends on how they define value. Value right now is not just about offering quality products and services. Customers are going to be asking for a lot more. They are going to be asking for accountability. They're going to be asking for reliability, consistency, the ability to manage the feedback and the complaints that come. And so the brands that will succeed at this time are the ones that are able to define value differently, the ones that are able to price right, and I think the ones that are able to harness data. Data is very powerful, data and technology. We're talking now about artificial intelligence and all those. But those who are able to harness the right data and the customer are the ones that will succeed. In terms of platforms, Nigeria is also an interesting place for the consumer. Online and offline platforms have to work together for brands to succeed. And let's not forget that Nigeria is not one market when it comes to the consumer. Nigeria is a conglomeration of markets. So what's happening in northern Nigeria, northern consumers, appears to be quite different from what's happening in the southern market. And being able to play around these dynamics is where the real value and the opportunity for growth provides itself.
What do you think should be the strategy right now for businesses to provide, good deals, good discounts while maximizing profit? And is it possible to put the consumer first at this time?
It's always possible to put the consumer first. And one of the ways to do that is to be mindful of the aspirations of consumers. We've been doing some very interesting work on this at the Lagos Business School. And it's interesting to find that the average Nigerian consumer is highly aspirational. You will find people who are earning less than the minimum wage and who don't live in houses of their own or drive cars of their own, aspiring in the next 5 years to live in Banana Island and to drive the most expensive cars. Hope appears to drive the aspirations that we see in consumers. And I think that brands that take these aspirations into account in producing products and services, and also in the way that they market these products and services, are the ones that are more likely to put the consumer first. The other interesting thing is really focusing on what the customer needs, showing empathy. Empathy is something important, and this is where brands can make that value.
Right. Talk to us about retail opportunities, in Africa right now. We've seen FX market distortions, foreign businesses finding it hard to get their funds, repatriated back to their countries at this time. And we're seeing a lot of big brands, pulling out, of the country. Talk to us about this.
You are right. Retail has taken a big hit in the economy. But the interesting thing is that while the big brands are pulling out, some traditional brands are extending their reach. It's really interesting that in the same market, some people are doing very well, while some others are leaving the same market. And what makes the difference is about understanding what retail really is. Retail is not just buying and selling. Retail is consumer engagement. Retail is a mindset. It's about knowing and understanding the consumer, and therefore planning to set the consumer to be closely engaged with the consumer. And that is where the opportunity is. The opportunity for partnerships, the opportunity for integration across platforms, the opportunity for retail education, and even the opportunity for policy development. Retail is a space where there can be a lot of policy development that will then affect other sectors of the economy.
And looking at 2023, we've had all kinds of macro headwinds. We still have inflation at an all-time high. What are you seeing going into 2024 for Nigeria and Africa at large?
Well, I foresee that even though inflation is likely to remain high, brands are going to be repositioning themselves to understand better what value means. I think that the consumers are going to continue to go for what really they care for. They're going to reprioritize their spending, and they are going to go for brands that really deliver the value they're looking for. So it's a time for cautious investments. It's a time for getting closer to the consumer. It's a time for pricing rights. It's a time for emphasizing reliability and consistency, so that at the end of the day, we keep the customer first.
Keep the customer first. Also, a professor of marketing at Lagos Business Schools. Great having your perspective today.
Thank you.
All right, to some other company news. See, an indigenous oil exploration and production company, Walter Smith Petroman Oil Limited, operators of the Bigwe Marginal Field OML-16, says it plans to expand its modular refinery capacity from 5,000 to 10,000 barrels of crude per day. This is coming from the chairman of Walter Smith Group, Abdulrazak Issa, during a visit of the Minister of State for Petroleum Resources, Oil, Senator Heineken Lokogbiri, to the Walter Smith refinery located in the Bigwe community on Ohaji, Egbema local government area of Imo State. The Minister of State for Petroleum Resources, Oil, Senator Heineken Lokogbiri, arrives Walter Smith Petroman Oil Limited, located in Ohaji, Egbema local government area of Imo State, in company of the Executive Secretary of the Nigerian Content Development and Monitoring Board and helmsman at the Bank of Industry. They're received by the Walter Smith team, led by Chairman Abdulrazak Issa. Before taking a tour of the refinery, there was a familiarization meeting and interactive session between both parties.
Sitting in honor within this complex is the industrial park as well, because we have 65 hectares of land around here.
The quickest way to fix our energy solution, in Nigeria, should be through modular refineries. While we wait, the total rehabilitation of these big refineries.
Then a tour of the modular refinery project. When the tour was over, the minister commends Walter Smith Group for a laudable project.
The shortest way to addressing our problem is, the modular refineries.
Others on the entourage also share their thoughts on the visit.
We have produced almost 600 million liters of various products from this refinery. About 20 trucks leave the refinery on a daily basis.
Now, if we are able to support that industry more, we will see that we'll be able to it will have implications on exchange rate volatility. We'll be able to manage inflation better. And of course, fiscal pressures in terms of all the noise around minimum wage may reduce.
Meanwhile, the chairman of Walter Smith Group, Abdulrazak Issa, sheds more light on the company's plan for expansion.
We have an ongoing engagement with the National Oil Company, and we are also canvassing the support of the minister to see that we conclude the engagement with the NNPC so we can get the feedstock that we require to take us to 40,000 barrels of oil per day refining capacity.
The Walter Smith Modular Refinery, located in Mbigwe community in Imo State, commenced operations in November 2020 after its commissioning by former President Muhammadu Buhari. The modular refinery stands as the largest commissioned modular refinery in Nigeria. All right, let's get a check on the markets now, starting with the local bourse, which traded marginally higher yesterday. Let's take a look at how the market performed, even though we're still seeing some kind of bullish sentiment. Look at the all-share index and the market cap today. That was what traded yesterday, marginal 0.07%. We're still looking forward to how the market is going to close today for the last trading week, which is today, Friday. And we see the equity cap added about 27 billion naira, but still holding that 39 trillion level for the equity cap. Let's look at the next one now. We see the volume activity was a little bit subdued yesterday, with value and deals both in the red compared to trading the day before that. It was down 53.32%. That's for the value traded in the market. Volume, though, stayed on the big side. There, 31.57%, 563.71 million units. That was what was traded yesterday, with deals at 6,579. Let's look at the sectoral performance. We see it's mostly green, with just consumer goods marginally down 0.05. Banking had a marginal increase there, 0.03%, with some of the FUGAs managed to add to their share price yesterday. Industrial goods ended in the green yesterday, also marginal, but insurance was the most convincing move yesterday. We saw that added 1.27%, while oil and gas continues in that trend we know unchanged. Let's look at the next one now. We see top trades. We see Sterling, Transcorp, and Fidelity. Those were the top trades yesterday by volume. Both financial services, Fidelity and Sterling, with Transcorp 77.13 million units of stocks. That was what's traded. Let's get a sense of what happened in the fixed income market now. We see yields still looking quite bullish there for the January 2024 bond. There was two deals that was traded worth about 6 billion naira. Just two deals, 6 billion, and we see the discount rate there 5.30. Let's look at the next one now. We see the FGN bonds for June 2053. That's one of the long ones there. That had about 22 deals. We see that was in high demand, but the total deals for yesterday, number of deals were 33, worth 26.83 billion. And if we look at the OMO market now for the March 2024, October 2024, February 2024, looking forward, we see two deals each coming to a round figure of 6 deals. That was what we had yesterday, valued at 40.6 billion. Let's bring in Caleb Alimi now to bring us up to speed, Chief Dealer at Providence Bank. Great to have you on the show. Good morning.
Good morning, Laddie. Thanks for having me.
Fantastic. So are we expecting any Black Friday discounts with the yields today? No pun intended there. But talk to me about the T-bills that are traded before now.
I think the person doing Black Friday has been the Debt Management Office, the DMO. There was an auction on Wednesday, an NTB primary auction on Wednesday, and we saw them sell an extra 350 billion from what was originally offered. And they did that by managing to also still keep rates on the longest paper, which was the 1-year paper, stable. They sold over 340 billion extra on just that 1-year paper, but they managed to keep the rates at 16.75. We saw the 91-day and the 182-day paper, marginally inch up by just 100 basis points on each of them. On the 91-day paper went from 7% to 8%. And then the 182 days went from 11 to 12%. But for Black Friday, I think it happened on the 1-year paper where they sold in excess of 340 billion. Totally on that last auction, they sold 350 billion extra, 350 billion extra, which brings their borrowing from the local markets to over 11 trillion. Right. Just a little over. In just exactly 11 months. I think due to the supplementary budget, the DMO has continued to show a bit of aggression, in financing the budget from the local market, and they're doing a pretty successful job at that.
Right, and definitely that tells us that borrowing is actually getting higher, at this point in the market. What does that portend for the economy going forward?
Yes, borrowing is going higher, and like I said, it's largely because of the supplementary budget that was sparked. What it portends for the economy going forward is that rates will remain elevated because investors will continue to demand higher rates when they know that the borrower, is going to continue borrowing. So the rates are just going to remain elevated across the treasury bills, across the bond space, fixed income generally, and largely prime lending rates as well from bank to So the real sector will remain elevated.
Is there a chance a private sector might get, crowded out from this market, seeing the way the federal government is going at this point?
Not exactly. What we actually find is that the private sector is actually adjusting their pricing to also sort of match up with the federal government. We have blue chip names that have been coming to the market for commercial papers, but they've been also forced to push their rates higher since the federal government, which is largely risk-free, is offering very high rates on its own borrowings. So what we've seen with the blue chip companies is that they're also having to raise their interest rates even as they come to the market for commercial papers. So these blue chip companies are no longer going through the banks for prime lending rates and all of that. They just come to the market and float commercial papers, which is still of value to the investor.
Right, and looking at the inflation story, right now it's definitely at a new high. Going into 2024, and definitely we know investors will be looking to beat inflation, going forward. Do you think this market is going to be able to somehow match up in 2024?
Well, in my short time as a banker, I've never actually seen I can't recall when interest rates sort of exceeded this sort of high inflation rates. What we'll get is a tightening, a narrowing between that spread, which we've seen inflation at 27% and interest rates have come up to around 20%. I'm talking about the yield on the 1-year treasury bill to around 20%. So we've seen it, consistently narrow from where it was at the beginning of the year, where it was about 1,000 basis points apart, but now we're seeing it shrink to around 600 basis points. What could happen is it could shrink a little further, but will it ever match up and exceed inflation? I don't think that would happen.
Right, and definitely, do you still see investors, piling money, into this market going forward with the macro headwinds, we have at this time?
Yes, I think we'll continue to see investors, pile money into this place because earning a 20% possibly, or a 19% possibly risk-free I think it's very good for investors. There are not many places you're going to, get that kind of return. And if the federal government is willing to give you that kind of return on a 1-year investment, I think we'll see more investors continue to come this way. We're getting increased interest from customers, actually.
Right, increased interest. We'll definitely keep watching out for that. Thank you so much, Caleb Alimi, Chief Dealer at Providence Bank. It was great having your perspective today.
Thank you so much, Ladi. Cheers.
All right, now let's get a check on other markets. Now we see the crypto market still quite bullish at this point, even though we had all of that bad news this week with Binance and the CEO of Binance actually stepping down. We see that Bitcoin firmly in the green this morning, looking at the heat map from Coin360. We see Ethereum managing to rise back above the $2,000 level, also in the green. But Solana, on the flip side there, showing pockets of red with OKB, XLM, with profit taking going on there, and BNB somehow returning to the green, even though we know the Binance exchange is in the middle of all the fiasco we've seen in the market today. Let's look at the sentiments now. We see is greed at 66 points. Showing that traders are still greedy, but less than what we had, previously, about 70% for the fear greed index, showing market sentiment. If you look at the top cryptocurrency we track on the top 100 there, if we see the top 100 coins, we'll look at the top 100 coins and we see Bitcoin this morning was trading above that 37 level. Top gainers, we see gas there, not seen that on the top gainers counter for a while. It's up 18.55%. This morning for the top gainers counter. Let's bring in Gilbert, your partner now, financial market analyst. Gilbert, great to have you. Good morning.
Yeah, good morning, Mr. Ladi. Great to be here.
Yeah, so we'll see more data out in the crypto market. Bitcoin has been flowing from Binance to Coinbase since day before yesterday, and so far Binance has registered a decrease of about 5,000 Bitcoins, while Coinbase has gained 12,000. What's your take on this?
Okay, personally, I think this is one of the most interesting data out there for investors and analysts. This actually came out from CryptoQuant, and this is because it is telling us what is happening, or a new dynamic happening and a change of the market landscape entirely. This is because Binance decreasing about 5,000 BTC outflow and Coinbase gaining 12,000 tells us that within the short period of time that there was fear and uncertainty in the market with CZ stepping down as the CEO of Binance, Coinbase was the winner of this entire feud. And this actually reveals to us a grand scheme of things. And I'm going to tell you why. The US is ready to make sure the companies that are going to have dominance in the cryptocurrency space have to be US-based companies. And this is because we have over $20 trillion sitting on the sideline from ETF, which most of all these companies will be US-based companies. So there is no how this over $20 trillion worth of money is coming into the market, and the US is not going to be the dominant company that will be playing in this space. So in the grand scheme of things, Coinbase is supposed to be the dominant crypto exchange out there, and USDC and not USDT is meant to be the dominant stable currency out there. Meanwhile, for now, even though these outflow, Coinbase was the winning exchange that received this outflow. And we also see USDT also facing some backlash after they freezed a couple of assets recently. Binance still remain the dominant asset, dominant crypto exchange out there. Meanwhile, I'm still watching, and I would love to see how this really plays out. But for now, I think regardless of the short-term fear and uncertainty, Binance still have trust from majority of the market participants. But I would still really like to see how much the US will have to play this game, and how much of should I say, talking to legislator from dominant exchanges like Coinbase in the US will play and shift the dynamism of the market. But this is the beginning of a new trend, and it's what every investor watching out, so we will know what will happen. But this is all the aftermath of regulatory scrutiny, and there is no how ETF is going to be launched with over 20 trillion coming into the marketplace from the US, that the US wouldn't want a US-based company to be the market dominant exchange or stable currency.
Right. I'm talking about, the US at this point. If Binance did not launch the Binance US platform that's supposed to serve, citizens of the US, would this still have happened?
Probably it would have, but the game would have been different, because there would have been ways that would try to see how global travel rules or global monetary regulation could still clamp down on Binance. But it was really not... Probably, but right now the fact that Binance US was in existence and was operating before now without regulations is enough to nail Binance down anyway.
And what if Binance was a US company? Would they be going through this? All right, we'll try and get Gilbert. Okay. All right, I can hear you now, Gilbert. Okay, why? We see the network's a little shaky.
We see people trying to.
All right, Gilbert, seems the network is getting really shaky at this time. We'll still try and... Okay, Gilbert, let's try that again. Can you hear me? All right, we'll try and get Gilbert back. He was basically talking about the issue right there with Binance. If Binance was a U.S. company, would this really have happened at this time? With Gilbert saying that the U.S. is trying to get as much position in this market, looking at the Bitcoin spot ETF that might be approved soon, and they might be wanting to get most of all that action going forward. We'll try and get Gilbert back again to finish his thoughts on that. But let's get back to the top Guinness counter now. We see a new one there, Blur, on the top Guinness counter this morning, 55 cents. With a double-digit gain of 12.59%. Elrond, this one's been there for a while in the crypto market. That's $46.34 per coin, up 4.55%. Marginal, not too big move up at this time, even though we're seeing some double-digit gains. Mina Protocol is also on the top Guinness counter this morning, 68 cents, 4.23%. So we're seeing traders still, quite bullish in this market, at this time, even though we've had that market moving news that came out this week about the Binance exchange. We're still seeing investors, even though they pulled out a lot of funds, from Binance. We saw a lot of sell-offs on the day that news came out, but we saw most of these traders, coming back at this time, getting more bullish in the market, but who knows if that's going to continue going forward, because it's still a developing story at this time with what happened with Binance. So we're still watching out for what's going to come next. Let's look at the losers counter. We see Celestia there, one of the new kids on the block there, $5.54, a big drop there, 7.71%. This recently got listed on major exchanges, at this time. So we're seeing a lot of traders still, trying to find out the right price, at this time. So expect a lot of volatility for Celestia. That was recently listed, and for the ordi, that's the ordinals there, $21.21, 7.06% drop. This also got listed recently in one of the top exchanges. IMX, that's trading at $1.39 this morning, down 6.60%. Ape, that's for the metaverse play there, $1.41. That's been quiet for a while now. We've seen that the metaverse part of the market still quite quiet at this time, 5.43% drop, and it was equating also getting on that top losers counter at 21 cents, 5.43%. Let's try again. Let's see if we can get Gilbert back. At this time. Okay, not yet. We can still get Gilbert back. So that's how the market, is looking at this time. It's a Friday. Definitely, we know the tradition here. Fridays are always days of sell-offs in the market, but we're seeing Bitcoin managing to actually stay, in the green this morning. It's a Black Friday, and definitely investors will be looking for deals at this point, trying to get some of those cheap investments. Maybe they can actually get some good deals, going forward. So that's how the market is looking today. Still a greedy market. Looking out for how the weekend plays out for the crypto market, knowing fully well that the market never sleeps and doesn't close. That's a wrap on the program today. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. You can also watch this again on our YouTube channel, www.youtube.com/Channels Television. And you can watch all our other productions. Thank you for watching. Have a blessed Friday and a profitable one. Vladi Williams.